Hello, my great viewers. Welcome to this video today. I hope this finds you well. So, for those who are tuning in for the first time, here we dedicate ourselves in or our time in mastering the market structure. So, if this is the first time that you are tuning into this channel, so as I've said, my name is Anthony. So, if you want to learn on how to master the market structure together with me, so this is your channel. So what I'm gonna urge you to do is only make sure you subscribe to the channel. Don't forget to turn on the notification bell so that you get notified immediately I upload a new video. So in most cases, I do upload my videos twice a week. On Sunday, we do the top-down analysis together here. And also on Wednesday, if I get a good update, I do also upload a video to update you on what I'm expecting or what I'm anticipating. So today also I have a few pairs to analyze with you guys. So I believe you will enjoy the video and always make sure you learn something before the end of my videos. So without wasting time, let's dive in and see what the market has to offer for the coming week. So in front of you, we have Euro USD. That is the first pair we are going to analyze together. So I'm not going to break down what we did from the higher time frame. So kindly, if you haven't watched my previous video, so make sure you do so because that is when I explained how we arrived to this area. But briefly, let me just analyze this one. So when you are reading the market structure or when you are analyzing, you are doing the top-down analysis, it's always good to start from a higher time frame for you to understand where we are coming from and where we are heading to. Okay, briefly from the daily time frame, what can we see? We can see the market, this was the last break of structure to the upside, right? So market gave us this break of structure to the downside, to the upside, sorry. So ideally, we were expecting the market to come and respect this low, yeah? So this was our protected low. But what do we see? We saw the market came down and gave us a change of character instead. So that is a signal that the market is shifting direction from bullish to bearish. So ideally, this is to mean now the higher time frame direction bias is bearish. So, and we know very well if the market is bearish because it is always advisable, always make sure you follow the trend of the market. Don't ever go against the trend of the market. So if the market is bullish, always look for buy setups. If the market is bearish, always look for the sell setup because they have the high probability of playing out, right? So sometimes uh you might also consider doing the or looking for counter trends as you are waiting for a market to come to your point of interest for you to take the trade. Although the counter trade are very risky, the counter trade are very risky and it's not something that I recommend a beginner trader for you to do. Okay, so now looking at this chart, now that you have this change of character to the downside, currently this is my high and this is my low. That is my dealing range, and this is what we are going to focus on. So uh after coming up or after identifying your swing high and swing low, the next step you are supposed to do, for those who have been here, you have been watching me, you know very well, we normally pick our Fibonacci place from high to low. So the idea of doing this is to identify the premium and the discount. And we know very well. So after market gave us this break of structure to the downside, what do we expect? We expect a pullback to come at least to the 50% of this fib retracement too, or and then react to an area here on a point of interest above this area here before continuing to push to the downside. But now, are we going to start waiting for the market to come to this area? No. So we need a confirmation that the pullback of this daily swing, because this is our daily swing structure, we need to know whether the pullback of this daily swing has begun. Because until then, we can't say exactly that this is our swing low. All right. Now, how do we confirm that the daily swing has begun? So here, this is where we observe the fractal structure of the market. What do I mean by the fractal structure? I mean the internal structure of the market. And you can agree with me, this is where we had a fractal change of character. So market gave us a break of structure here to the downside, and this is the last break of structure. So what are you going to focus on? We focus on the last fractal break to the downside. And this is my fractal break to the downside. So although this structure that we are seeing here, this fractal that we are seeing here on the daily time frame, if you go down to one time frame lower, which is 4 hour time frame, this fractal becomes a swing structure. So in short term, or in simple term, for for the market to start this daily pullback, daily swing pullback, it has to the 4 hour swing has to change direction, or it has to give us a change of character. Okay, so let's go down to 4 hour and see whether we have that change of character. If you look at the 4 hour time frame closely here, you can see that this is the last fractal break to the downside. So this fractal on the daily, here on the 4 hour, becomes a swing. So if the daily swing wants to start the pullback, so we have to see the 4 hour swing giving us a change of character. And this is our high that we expect to be broken to the upside. Since the market never broke this high to the upside, that one means that the daily pullback, the daily swing pullback has not yet begun. And once we have this change of character to the upside, it doesn't mean the direction of the market has shifted. No. This change, if we get this change of character, that is to fulfill the daily swing intention. What is the intention of the daily swing? This pullback is to facilitate the daily swing pullback for a market to come to a point of interest on the premium before continuing to sell. But now, since we don't have that, we just follow what the market is telling us. Now, after we see on the 4 hour, this is our last break of structure to the downside. So ideally, we mark this point of interest around this area. So if you don't know how to mark your point, your order block, because that is what I trade in most cases, the order blocks. Okay. So what do you do? Always go to higher time frame. In this case, because we are in 4 hour time frame, so we go to the daily time frame. So what you do here in the daily time frame, mark your order block. The last buy before the sell. Okay, so if you have a week above your order block, always make sure you include that week. So that is your order block. So now you go back to your time frame, which is 4 hour time frame. The business that you have here in the 4 hour time frame is not to mark a new order block. So what you do here, you refine your order block. So when you are refining your order block, you are just reducing the size of that zone that you had marked on higher time frame. Okay, so in that case, we are not marking a new order block. So I refine this order block to this last buy before the sell, because this is the candle that led to this break of structure to the downside. Okay, so I can remove this. Okay, and then we'll be left with this zone. Okay, the same thing. If this 4 hour swing has to begin the pullback, what do we need to see first? We need to see the fractal changing direction. And this was the last fractal break to the downside. Okay, so this is the last fractal break to the downside. So for us to confirm that the 4 hour swing pullback has begun, we need to see the fractal change of character. And you can agree with me, this is a fractal change of character. This change of character does not mean the direction of the market has shifted. No, this is to facilitate the 4 hour swing intention. What is the intention, guys? The intention is to come to this point of interest and then continue selling to the downside. All right. So what do you do now in this case? You just read the internal market structure. You see, we have a break of structure here, and this is the last break of structure. Now, because remember, at the back of our mind, we know the daily gave us a change of character to the downside. So anytime market might start having that daily pullback. Okay. So what do you need to see? For us to know that the market is going to continue buying and take out this low, so market had to keep on respecting this internal structure. But what do we see here? After the market came to this zone, we had the first attempt, first mitigation here, first attempt here, the second attempt and the third attempt. Market failed to break this zone, meaning this zone was a very strong zone. Okay, so market tried to sell down, and what do we see? Ideally, we were expecting the market to respect this protected low. But now, since we are reacting from this 4 hour extreme point of interest, and always this external structure is always stronger than the internal structure. So market gave us this change of character to the downside. Okay, are you seeing this? We have this is the last fractal break, and then market gave us a change of character to the downside. So market shifted direction. So this is an indication that market is respecting the 4-hour external structure. And now this is the time now to start looking for an point of interest for you to start looking for a selling opportunity. Since you have a change of internal change of character, which is aligning with the uh external structure. In this case, we are bearish. So what do? You repeat the same procedure. So you go to the daily time frame. So the idea of going to the daily time frame again here is for you to mark your order block, because it is easy to mark your order block on higher time frame where we have few candlesticks. Okay, so this is our order block, the last sale, the last buy before the sale. Sorry. So now you go back to the 4-hour time frame and you refine your order block. You can agree with me, when you refine this order block, you will arrive to this indecision candlestick here, and this becomes your order block. So that is the last buy candle that led to this change of character to the downside. So once you have this, guys, you don't take an entry here aggressively. So what do? We also need to be sure that the market is going to respect this structure here. So because if you had to take an aggressive entry, I believe this is where you put your entry. Stop loss always above the high that led to this break of structure. You put your stop loss above there, and then your take profit should be down here. And you see now, for if you are an aggressive entry, this trade is going to give you a 2.9 risk to reward. And you know very well, for me, I like to target at least 1:3. So if I have to take this one is not going to be very convincing to me. So what do? Because now I have a 4-hour point of interest here, I like to wait for a confirmation, my people. So what type of confirmation do you wait for here? And on which time frame? Because this is a 4-hour zone, I will go to 15 minutes time frame for me to wait for that confirmation. Again here, what are you seeing? This is purely market structure, guys. There is no magic here. So you also read the internal structure. What is the internal structure telling you? You can agree with me, this is the last fractal break to the downside. Market gave us a fractal change of character here. This 15 minutes change of character here doesn't mean that the market has shifted direction. It means that this change of character is to facilitate the 4-hour intention. The 4-hour intention is for the market to come for a pullback to these areas here before continuing to sell. And what do you see? After the market traded to this zone, this is where we don't take an aggressive entry, my people. You wait for confirmation. You read the market structure. You see, this is the last break of structure to the upside. So once you have this break, market gave us a change of character. Immediately you see this change of character within your zone or an area that you expected this. Now this is time now for you to start looking for an entry. So you go to higher time frame. You can go always one time frame higher. For this case, because we are in 15, we go to 1 hour to mark our order block. So which order block are we going to mark? This candle here, the last buy before the sale candle. Okay, so for me, I missed that entry. One, because I refined my zone to this 15 minutes order block. And for this case, market never tapped to this order block. You see, market reacted from the 1 hour order block. And for this case, where do you place your stop loss? Because now the market has given us a change of character, you don't place your stop loss above here. No, you place the stop loss above the high that led to the change of character. So you put your stop loss a few pips above there. And where is supposed to be your target? You target the low, this low here, because this is the lower low before the market went for this pullback. So you can decide to target that high. And you can see by waiting for a confirmation, you get high risk to reward, because this trade, you can see, if we got tapped in here, this could have been 1:7 risk to reward. You can also decide to target this, which is almost 1:9 risk to reward. So that is one of the importance of waiting for a confirmation. You get a good risk to reward. And the second reason, or the second importance of waiting for confirmation, you increase your confidence while taking this trade. Because tell me, if you are taking this trade from aggressively here, you won't have that much confidence compared to the person that waited for confirmation around this area. Because for this person knows that now after the market has given him its confirmation, okay, so the market has the high possibility of now going to its direction compared to the person that took an aggressive entry around this area. So now what do we have here on this pair? So this pair, this time Euro USD never mitigated the 15 minutes order block, but this 1 hour order block. So for those who position here on this 1 hour order block, I believe you managed to get a very beautiful profits on this trade. Okay, so now that the market has this another break or subject to the downside, so I went to 4 hour time frame and I marked this order block. So this is where I've been waiting for the Euro USD to come for the last week, but the market never came to this zone. Okay, so now this is what I'm anticipating on Euro USD. So in case the Euro USD comes for this pullback, so this is where I will be looking for my selling opportunity. But now, hypothetically, if the Euro USD is going to continue selling down, then I will wait for a market to have a break of structure here to the downside, right? So once I have this break of structure to the downside, so I will also pick my Fibonacci. Now let's assume the market went a little bit lower to this zone before coming for the pullback. So I'll wait for a market to come for a pullback at least above the 50%. I will mark my point of interest around this area. And for this case, this will be my point of interest. This will be my liquidity grab. I will wait for a market to sweep this liquidity and then keep selling to the downside. But until then, if the market will have that pullback, maybe when the market opens, then look for your entry confirmation around this area to sell to the downside. So ideally, my bias on Euro USD is bearish, and we should be looking for selling opportunities. I believe this one is going to help you, and I believe you have understood the analysis that we have done here on the Euro USD. So moving on to the next pair, which is the GBP USD. And guys, because the GBP USD has a positive correlation with the Euro USD, we expect to see the same analysis. So you can see unlike the Euro USD, GBP USD gave us a break of structure to the downside. Also, the DXY, which is the driver of these dollar pairs, also gave us a break of structure. Okay, so now looking at the GBP USD, Euro USD, and the DXY, we can say that the Euro USD is the one that is lagging. What do we mean by lagging? We means that it's the one that is moving slow. Okay, Okay, now that we have this break of structure to the downside, what do you expect? As usual, we measure from high to the low. Okay, anything above the 50% is the right place for you to start looking for selling opportunity. If the market trade to the 50%, guys, I advise stop. If you are looking for any counter trade, avoid looking for any buying opportunity, because once the market meets this react to this 50%, it can do anything, guys, and you can reverse from that zone. You can see here, and this GBP USD is giving us a very good example of that. So after the market came to the 50%, reversed impulsively from that area. So if you are trying to buy from this area, then I'm very sure you ended up losing that trade. And that is why I started by saying counter trends are very risky. I don't ever take the counter trend if you don't know what you are doing. Okay, guys, before I forget, I do have the private mentorship. If you want to learn this, how to do this one-on-one with me, I have a private mentorship, my people. So if you want to join the mentorship, so find the link to my WhatsApp on the description of this video. Also, I will include the charges for the mentorship there. So before you come to my WhatsApp or before you DM me, so make sure you are ready to join the mentorship, because the charges will be dropped on the description of this video. Okay, so now let's continue. So what do you see here? So market came to the 50%. So for this case, GBP USD reacted from this order block. Although it is not a new fresh order block, it was already been mitigated, but that is where the GBP USD reacted from. Now I need us to go to the lower time frame. For this matter, because this is a 4-hour zone, we are going to go to 15 and see whether we got a change of character or a confirmation. And you can agree with me that this was our last break of structure. And after that break of structure, market gave us a change of character. The same to the Euro USD. GBP USD reacted from the 1-hour order block. And this is your order block, the last buy before the sell candle. So that is where it tapped in. So if you placed your entry around this order block, stop loss above here, I also believe you managed to get a very good trade here. 1:3 was it. 1:3 was it very beautifully. And if you are holding, this should be your final target, this low here, if you are still holding this trade. So what am I anticipating here on the GBP USD? The same thing on the Euro USD. So hypothetically, if the market is going to continue selling and take out this low, now that means I will have a new dealing range. So I'll pick my Fibonacci, place from the swing high to the swing low, assuming now this is where the low will be. I'll be waiting for a market to come at least to the 50%. And because we have a very massive fair value gap around this area, and we know very well, fair value gaps are very powerful, and this is what attracts the market to come to this area. And this is an area that I expect the market to come back, balance this gap, and then we continue selling to the downside. Okay, so that is one of my scenarios. In case the market opens up and decide to come back, so this is also where I will be waiting for the GBP USD. I'll wait for the GBP USD to have a trend towards this area. Once we tap here, I will also go to 15 minutes time frame and wait for that confirmation. Achieve a M shape or a change of character, and then I will take my entry there, targeting this low. So that is my anticipation on GBP USD. So the next pair we are going to do is a GBP JPY. So allow me to start from the daily time frame. So my chart is a little bit dirty, but I believe I'm going to explain what you need here, and then you are going to get it. So here, by the way, guys, when you are doing the top-down analysis, it's very easy. You don't have to complicate anything, my people. So first of all, when you are reading the market structure, you just need to follow the trend of the market. What is the market telling you? And you can agree with me, this is the last break of structure. And for those who have been following me, you know very well, how do I identify a valid pullback? A valid pullback should have at least 3 candlesticks that are closing below each other. You see, this we have the 1, 2, 3. So we have 3 candlesticks that are closing below each other, making this pullback to be a very valid pullback. So this is the last break of structure. Why am I saying that this is a valid break of structure? Because if we are make an horizontal line above this high, so market never closed above this high. So I know for those, there are those mentors that will tell you that here we have a break of structure. No. So for a break of structure, we need to see a candle closing above this high with a body. If you don't see a body, then that is what you call a liquidity sweep. Okay, that is not a break of structure. So for this matter, this is our high, and this is our low down here. So what do you do after doing that? You wait for a market to break either the high or the low. And for this case, market never broke the high, but it went ahead and broke the low. So giving us a change of character. Very beautiful. So once you have that change of character, what do? You repeat the same procedure. So you pick your Fibonacci, place from the swing high to the swing low. Okay? So after doing that, because this is your high and this is your low, so mark a point of entry that is at extreme. Okay, so in this case, we mark this order block because this is the last buy candle before the sell. And we have said if you have a wick above there, always make sure you include that wick like that. So if the market comes to this area, this is where now you should be waiting for your confirmation for you to start selling. But now because this zone is a very big zone, you can decide to go to 4-hour and refine your zone. So when you're refining your zone, we are not marking a new zone. We are just reducing the size of that zone that we had marked on higher time frame. And you can agree with me, For this case, we have 2 points of interest. We have this order block, and we also have this order block that is sitting at the extreme. Okay, because the market is now using this order block, currently we are going to have this one painting around that area. Okay, so now what is the confirmation that you are supposed to look at this area, guys? The same, you wait for the internal structure to shift direction or to align with the external structure, because the external is bearish. So we need to see the 4 hour internal structure shifting to the downside. And what is our 4 hour internal structure here? You see clearly this is the last fractal break, which is give us the fractal change of character. So whatever you are seeing here is to facilitate the 4 hour daily swing pullback, or the intention. What is the intention? For a market to come to this area and then we continue selling. All right. So this is the last break of structure here to the upside, or this is the last 4 hour break of structure. So you see the market never broke this eye to the upside. So instead, market left these three equal highs around this area. You see, we have the equal high here, we have this eye and this eye. And we know very well, once we see something of this sort, this is not always a good place for you to look for your entry. If you try to place your entry around this area, so expect the market to take you out, sweep, because we have a liquidity above this area. When you have these equal highs here, this is a pool of liquidity. So we expect to have a lot of stop losses above this area. So now, this is where, because now we are not talking about liquidity, so this is the last break of structure that we see. So ideally, we were expecting the market to push down and broke this low. But what do we see? The market came to this area here, this extreme order block. How do we mark this order block? The same criteria, guys. I went to 4 hour, a daily time frame, marked my order block, and then went back to 4 hour to refine my zone. How do I refine that? To the last sell before the buy, and that becomes my order block. So what happens here, guys? Because we are expecting the market to push down and break this low, but that one did not happen. So market came to this zone and we are having a good reaction from here. Okay, so market gave us a change of character, because now we trade what we see, not what we think. We don't force the market, because remember, guys, we have also this order block here that was never mitigated. Okay, so market, maybe it wants to push higher, take out this liquidity, because we have a lot of liquidity high that was left here, come to this zone and then continue selling. So we are not sure whether the market is ready to sell yet. So we need to follow what the market is telling us. So after the GBP USD reacted from this order block, gave us this fractal change of character, right? And this is our confirmation, guys. After you have this fractal change of character, so what do I do? What did I do? I marked this order block. You see, this is the last sell candle that led to this break of structure, or this change of character. So what was I waiting for? I was waiting for a market to come to this area, but the market never tapped to this zone, reacted from this fair value gap, and tried to buy to the upside. But you see, after the market tried to buy, never broke this high. Instead, it reacted from this area, and it's currently selling out. So that means this low now I'm going to use it as a liquidity. So if I have to take any trade now, this is where I will be waiting for the GBP JPY to come to this zone. For me, I will not also take an aggressive entry here, because if I have to take this aggressive entry from here, I will have almost 80 pip stop loss, and that is a very massive stop loss for me. So what will I do? I'll wait for a 15 minutes time. I'll wait for a market to come here. Once the market mitigate this zone, I will go to the 15 minutes time frame for me to look for that entry confirmation to target this high. So in case the market violate this zone and give us this change of character to the downside, it is well and good, guys, because that one also we expect that. Why? Because the market is reacting from the daily point of interest, and the daily time frame is bearish, guys. So if we get this change of character to the downside, well and good. So what do? We wait for a market to come for the pullback around this area. Okay, we wait for a confirmation for us to sell, and when we take our entry around that area, the target should be this lows here. But currently This is the structure that is in control. We have this break of structure here, and the market gave us this confirmation change of character. So if you have to look for anything currently, this is where that we are supposed to start looking for your entry confirmation. So that is my analysis on GPP USD, my people. Now you can tell me on the comment section, what do you think about this analysis? So the next pair that we are going to do today, we are going to analyze gold for those who like trading gold. So let's look at the gold. So let me start from the weekly time frame. So from the weekly time frame, what do you see? This is the last break of structure to the upside. So from the weekly time frame, we see very clearly the gold is bullish, my people. So what do you see? You saw the gold for the past few weeks had a very massive selling sales here. Okay. What was the intention of this sell? The intention was the market to come to this area here to fulfill the weekly swing intention. What was the intention? For a market to come to the pullback, mitigate this order block, and then we continue buying. And what do we see? After the market reacted from this order block, we have a very nice rejection from that area. And the last week, market closed with a bullish candle, meaning now the next point of liquidity or the next target of the market should be this eye. We have this as our buy side liquidity, and also this we also have this buy side liquidity around this area. So my anticipation is that we are expecting the gold to continue buying. So now we need to get our confirmation that the market is aligning with the weekly swing or weekly external structure. Where are we supposed to get our confirmation, my people? Because now we are on the weekly time frame, we go down to 4-hour time frame for us to look for confirmation. What is our confirmation? We read the internal structure. And you can agree with me, when the market was coming to this area, you can see the internal structure was very bearish. But what did we see last week? So last week, market gave us this change of character to the upside. You see, this is the last break to the downside. Then you have the change of character to the upside. And that is our confirmation, guys, that the gold is now ready to start buying. Do you jump in blindly once you see the change of character? No. So what do you do? Also pick your Fibonacci place from the swing high to the swing low. So for me, I was expecting the gold to have a deeper retracement, at least to the 50% before continuing to buy. Although I'm also anticipating still the gold will come have a little bit distressment, at least to come to this 50% and then continue buying. Although remember, gold is a very sensitive pair, and sometimes gold will not give you that deeper retracement, so you have to agree with that. Also, remember at the beginning of this video, I mentioned that the fair value gaps are very powerful. And another thing now, I have in doubt whether the gold is going to come to have this deeper retracement, is that we don't have any fair value gap around this area. If you look closely, gold is mitigating every fair value gap. You see this massive fair value gap? Gold came back, mitigated this gap, pushed higher. So the only gap that the gold had left here, it was this fair value gap around this area. So the market came down, filled this gap, and then you can see we are really buying around this area. So let's go down to 1 hour and see where the gold is reacting from. So you can see we have this break of structure here to the upside. Was this pullback valid? So good. We said a valid pullback should have at least 3 candlesticks that are closing below each other. We see we have at least 3 candles here, making this pullback to be valid. Okay. So gold came down. Because of that 4-hour fair value gap, gold was coming to mitigate this fair value gap and then continue buying. So what do I see here? I need to see a confirmation that the gold is respecting this zone and we are continuing to buy. If I look at the internal structure, for me, this is the last break of structure to the downside. Although now someone might say now we don't have a valid pullback. No, this is a fractal break of structure. Let's go down to 15 minutes and you'll see it clearly. You can see from the 15 minutes, this is my last break of structure to the downside. So what am I waiting for? I'm waiting for a market to have a break of structure here to the upside. If I get this break to the upside, that will be my confirmation now. Gold is going to buy. Because remember, gold, because currently we are reacting from this order block. So remember, gold can decide to react from this zone and then continue selling and take out this low. So we need a confirmation. If the when the market opens, if the market will have that uh movement and have a candle closing above this area, then that is will be our confirmation. So what do we wait for? You wait for a pullback and then continue buying to the upside. So hypothetically, assuming now the gold has given us this change of character, what will be your entry? So you will go up on higher time frame, identify an order block that led to this break of structure. So assuming now this is our structure, this will be our order block. If it is not clear for you, always go to one time frame higher. That is the 4 hour time frame. And you can see very clearly from the 4 hour time frame, this becomes your order block. And we said if you have a wick up below your zone or above your zone, always make sure you include that. So that will be your order block. You can go down to 1 hour time frame. You refine it. The last sell before the buy. Then 15 minutes time frame for you to get a good entry. So we refine it to this order block and this becomes your order block. So if the gold will have this break of structure to the upside here or this change of character, then this is an area that will be positioning stop loss below this low. And what will be your target? So let me remove this order block. This I will be your target. So guys, always make sure you wait for a good structure to show up, because for me, I know that those people who are going to use this one as a change of character. For me, no. I'm going to consider the external. The external, this is the last break of structure. So I will wait for this eye to be taken out for me to get that confirmation. Then wait for a pullback around this area. Then use this low as your liquidity. Then position here, target this eye. Okay. Okay, so that is my analysis on gold, my people. So tell me on the comment section, what do you think about this analysis? So the next pair that we are going to analyze is the BTC USD. BTC USD. Okay, let's start from the higher time frame, daily time frame. So again on the BTC USD, I'm not going to do all this analysis. So if you didn't watch my previous video, so kindly make sure you watch the video because I explained everything that you see on chart. I explained this analysis clearly on my previous video. So I'm just going direct to this zone around this area. So from the 4 hour time frame, what do you see? So from the 4 hour time frame, this is the last fractal break of structure to the downside. This is the last 4 hour swing structure. We have this break of structure, meaning this is our high that is in control. This is our low that is in control. So looking at the internal structure, we see that the internal structure is bullish and this is the last break of structure to the upside. So what do we expect? Since the market reacted from this 4 hour order block, we were anticipating for a market to push down and break this low. But do we see the market breaking this low? Not really. Market never broke this low. This is just a sweep of liquidity. So currently, this break of structure, this order block is the one that is in control. But now we need a confirmation with the internal structure. What is the internal structure? The internal structure is telling us that we are bearish. This is the last break of structure. Let me label it. So we have this is the last internal break of structure to the downside. If the market really wants to continue buying, then the market will have to take out this eye. But until then, we are bearish, my people. And since we are coming from this 4 hour swing point of interest, we don't expect this zone to hold. We anticipate that this low is going to be broken. And for that matter, this becomes our current structure. We have this break of structure to the downside. So what do you do as usual? We go up on a higher time frame, one time frame higher. That is the daily time frame. Here on the daily time frame, we identify our order block. This becomes the last buy before the sell. Go back to 15. Sorry, go back to 4 hour time frame. Refine your zone. This becomes your zone. So if I pick my Fibonacci from high to the low, you see now this is why it is very dangerous to start looking for buying opportunities once the market up to the 50%. Because we know very well market can decide to continue selling from this zone. Okay? So market has no, it's not a must for a market to come to this order block. If the market comes to at least the 50% of this dealing range, it might decide to continue selling to the downside. But we need to get a confirmation, my people. So, what is our confirmation? We read the internal structure. Let's go to the 1 hour time frame. So here on the 1 hour time frame, what is our internal structure? You can see this was the last fractal break. Market gave us a fractal change of character, a break of structure, and this is the last break of structure to the upside. So after market gave us this internal break of structure, then that means this is our low that is in control, and this is our high that is what? That is in control, my people. So what do we expect? If the market really wanted to sell, it should have had a candle closing below this low. But instead, market came down, swept this low, never had a change of character here. So this is just a sweep of liquidity. So after market swept this liquidity, and this is why, guys, it is very important to wait for a confirmation. Assuming someone was taking an aggressive entry from this area, so that means you place your limit order there, stop loss below this low, and then you target this high. You see, this person could have been stopped out. But what if you waited for confirmation, my people? What is your confirmation? Wait for the internal structure to shift direction. You see, this is the last break, then you have a change of character around this area. So immediately I saw that change of character, then I started looking for my confirmation to get entry. So ideally, I had marked this order block here. You see this last sell before the buy. So that was my order block. So I was waiting for the BTC to come to this area for me to start looking for that entry. But BTC never came to this order block. So reacted from this area and then started buying. So what I did, I decided to go down to the 15 minutes time frame and see what was happening. And when I went to the 15 minutes time frame, I saw that we had this order block around this area, and that is where the BTC reacted from. Okay, so BTC reacted from this order block and pushed up. So now I say that if the BTC, because now I was not sure whether the BTC is going to have a small reaction here, a small pullback, and then push lower to this 1 hour order block. I said now, if the BTC was good enough or strong enough to react from this area, I need to see a confirmation that this is where the BTC is reacting from. And I saw this one very clearly. I waited for internal change of character. You see, this is the last break of structure. So where it should be my confirmation come from? We have this change of character to the upside. So immediately I saw this change of character. Now this was the time for me to start looking for my entry. And where was the entry coming from? We have this order block that is resting down here. So ideally, this is how you mark your order block. You include that low like that. So if you place your entry around this area, where is your stop loss? Your stop loss should be below this low. You have a very small stop loss around that area. So where should be your target? Target this eye. And this trade gave us almost 1:3 risk to reward. That is, if you decided to target 1:3, it was somewhere around that area. Let's check whether the trade hit this target. We never hit the target, but this is where you are supposed to you went to place your take profit. 1:3. You target the previous high like that. And if you get like something like 2.6 risk to reward, that is not bad. It's a very good risk to reward. Okay, because we know very well once the market takes out the external structure, market is going to come for a pullback before continue to buy. So currently, what is my analysis on BTC, or what is my anticipation? Since now we have a break to the upside, we have this break of structure to the upside. So what do I do now? I go to the higher time frame, weekly, 1 hour time frame for me to mark my point of interest. You can see we have this very nice order block. This is the order block that led to this break of structure. Although the 1 hour has not that break, but 15 minutes has that break of structure. So if I go down to the 15 minutes time frame, so here we refine, this becomes our zone. And you see one thing, my people, if you read the market structure well, you don't have to struggle with the liquidity and the inducement. Because once you do that one very clearly, the inducement and liquidity is going to show itself. And for this case, you can see we have this very nice equal highs, equal lows here is our liquidity. If you have done your analysis, if you have done market structure very well, your top-down analysis, and at your point of interest, you don't see any liquidity, just know that where you are looking to enter, that is where the liquidity is resting. Okay? So wait for a market to come to that area and wait for a confirmation. All right. So now this is my analysis on BTC. This is where I will be looking for my re-entry. Stop loss below this low. Stop loss should be below that low, and then you target this high. My people, again, don't enter aggressively around this area. Don't say that because now I told you that this is your entry. Don't take that aggressive entry from here. Always wait for confirmation. And where is the confirmation going to come from? At the 5 minutes time frame. So wait for a 5 minutes to give you that shift on structure, and then you continue buying. Because don't forget, this is the low, this is the lower low, the higher low that led to this break of structure. So market can decide to sweep this liquidity, this low, before starting to look for any buying opportunities. But ideally, this is my setup on BTC USD. So wait for a market to come to this area, then wait for that entry confirmation before looking for any buying opportunities. And I believe the last pair that we are going to analyze today is the US 30. I've been getting this request a lot for me to analyze this pair. So let's look at it together. So US 30 on a weekly time frame. Let me clean my charts. What do we see here on the weekly time frame? So you see this is the last break of structure to the upside. So we have that break of structure to the upside. So let me pick my Fibonacci, place from the swing high to the swing low. So ideally, we're expecting the market to come at least to the 50% before looking for any buying opportunities. So because here we have a lot of candlestick, we need, let me mark the equilibrium, remove the Fibonacci, then go to one time frame higher. For this case, we are going to monthly. We mark our order block, and this becomes our order block. So any point of interest that is within here, it's valid. So we go to the weekly again. So here on the weekly time frame, okay, I have 2 points of interest. I have this order block around this area. So we have this order block, and we also have this extreme order block around this area. And this becomes my point of interest. So I leave this one pending, and this is where I have my order block. So the next thing we are going to look at is the internal structure. As this weekly time frame swing pullback began, so we look at the fractal structure, and you can agree with me, we have a fractal break here. We also have a fractal break around this area, and we also have a fractal break. So ideally, we were expecting the market to keep on respecting this fractal, but currently we saw the market has given us a fractal change of character, and that is our confirmation that the weekly swing pullback has begun. This one does not mean that the market is bearish. No, this is to facilitate the weekly swing pullback for a market to come to these areas before continuing to buy to the upside. Okay, so now we go down to the daily time frame. You see, whatever looked to be fractal on the day on a weekly time frame, when you go to the daily time frame, becomes a swing. You see, this is the last break of structure, which led to change of character to the downside. So this is to mean the daily structure is bearish because this is the last break, and then this is a change of character to the downside. So after this, what do you see? We read the internal. We said, my people, until the market has a fractal change of character, we cannot say that the pullback of this daily time frame has begun. So currently, this is the daily swing high, and this is the daily swing low. But as the change of character happened yet, let's look at the internal structure. So what do you see? You see we have this break of structure, and then we have this break of structure. So currently the daily is still bearish and the pullback of this daily swing has not yet begun, my people. So because now this is the low that is in control and this is the high that is in control. So this that looks like fractal here on the daily, when you go to 4 hour becomes a swing structure. Okay, so we identify this order block. This is the order block that led to this break of structure to the downside. So let's go down to 4 hour now. Now, what do you see? When you go to the 4 hour, this becomes a swing. So the 4 hour, this is the last break of structure, and this is our high. Okay, so until we break this high, we are still bearish. Okay, so if we refine our zone, we can come up with this candle here. So this is our last buy before the sell, and that becomes our point of interest. Now look, we don't take an aggressive entry from this area because this is a 4 hour zone. We need a confirmation. So we go to 15 minutes time frame to wait for that confirmation. Okay, so this is the last break of structure here on the 15 minutes time frame. You see the market never broke this high to the upside. So this is the last break of structure which led to a change of character. We have this change of character. So immediately you see that, what do you do? Go to one time frame higher, go to 1 hour time frame, mark your point of interest. So for this case, we have two point of interest. We have this order block and you also have this order block. Now, this is where now you include the concept of liquidity, my people. Because if you go to 15, you can refine this order block like this, and you can also refine this order block like this. Now the question is, will you position here or here? Because now above this order block, we have this relative equal highs here. So do you think the market is going to respect this zone when we have this liquidity above here? Remember, I've told you, after you have done your market structure or your top-down analysis, and then you realize that after identifying your point of interest, you can't see any liquidity visible here below the zone. So know very well where you are looking for your entry, that is where liquidity is. So for me, if I was to look for an entry here, I will not even bother to position from this area because I see above my order block, I have these two relative equal highs, which is liquidity. So for this matter, I will mark this one as liquidity and then identify this zone above here as my point of interest. So, and this is where you are supposed to position. You place your sell limit around this area. Stop loss above this high. You don't have to place your stop loss above this high because this is the high that led to this change of character. So you put your stop loss below there and then you target this low. And I believe this is what is currently playing out. For those who managed to see this, I believe you are still holding this trade. And this is a very beautiful trade, guys. It's almost 1:10 risk to reward. So currently for the US 30, I don't have anything good. If the market, so what I can say, if the market is going to continue selling and have this break of structure, if you get this break of structure to the downside here, so what are you supposed to do? Wait for a pullback, mark a point of interest here. So always go back to higher time frame, either 1 hour or 4 hour time frame, mark that point of interest, wait for a market there, and then start looking for that selling opportunity. Currently, we don't have anything good. Probably on Wednesday, if I see something good, I will be coming back and update you on US 30. So guys, thank you for watching this video, and I believe you have learned something on this video. So a quick reminder, if you haven't subscribed to the channel, kindly make sure you subscribe to the channel. Until next time, it's a bye bye for now.